Good afternoon, ladies and gentlemen. My name is Victor van Hoorn. I'm the Executive Director of Eurosif, and I would like to welcome you to this second edition of our monthly Sustainable Finance Update, the aim of which is in a condensed, short time frame of roughly 40 minutes to provide you an update of all the relevant developments of what's going on in EU sustainable finance, and to hopefully shed some light on what are complex procedures and decision-making processes at the EU, and answer all the questions you may have. Just as a practical point, you can raise Q&As, questions through the Q&A tool, which should be available and enabled. We will try to pick up as many of those questions that you may have. If we don't manage to answer all the questions, we'll make sure to get back to you after the webinar. And if I believe the webinar will be recorded and made available later on for people who unfortunately have managed not to dial in today. But without further ado, for today, moving on to our agenda for today. We will provide you a quick snapshot update of what we know and what we don't know yet on the new EU Sustainable Finance Strategy. We'll provide you a quick update on relevant developments in the area of the Sustainable Finance Disclosure Regulation, and we will provide you afterwards with a snapshot of what's going on around the EU Taxonomy, as well as the recently proposed Corporate Sustainability Reporting Directive. And we'll finish off with flagging some future developments around the EU Green Deal that may be of important relevance for sustainable investments. So without further ado, jumping into the new EU Sustainable Finance Strategy. I think it's fair to say that we've, everyone has been anxiously awaiting this new document, which will, once adopted, lays down the policy priorities and actions for the European Commission during its, the remainder of its political mandate, which runs until 2024. It was first expected end of last year, then postponed again. Now we've been reliably informed that we should expect adoption of this document somewhere in the first half of July, right before, hopefully most of us can enjoy some summer holidays. In terms of the key themes that are likely to be addressed in the strategy and where we, may see clusters of policy actions, first one will be, what we label risks to the financial system, or the more macro and prudential aspects of financial regulation, where it will probably focus on the prudential regulators' supervision of the banking, insurance, and maybe in some cases pension fund sector, and their resilience towards future climate risks, be it transition risks or physical risks. And there we may see the European Commission strategy building on a lot of the work already being done by the Network for Greening the Financial Sector, which brings the NGFS, which brings the supervisors together, as well as work done by the European Central Bank, who recently announced its new Climate Change Center, and also the work by the European Banking Authority and EIOPA, the European Insurance and Occupational Pension Fund Authority. So all those developments may find themselves encapsulated in part of this future strategy. The second point we expect as well is that this new sustainable finance strategy will anchor itself strongly in the EU Green Deal agenda, which is obviously a more holistic policy agenda covering a wide range of sectors of the economy, and how they should align with the ultimate long-term sustainability objectives. Since the previous strategy, we've now had the Green Deal. We've recently had a political agreement on the European climate law, which enshrines in law the objective of carbon neutrality in 2050, and sets also some intermediary targets for 2030, flagship being this 55% reduction of greenhouse gas emissions at EU-wide level to be achieved by 2030. And we expect that in the part of strategy, quite a bit of focus will be put on how financial institutions are aligning with those objectives in terms of their financing, their investment decisions, and in a way, you could see it as some form of net zero commitment, but rather than net zero in traditional way, focusing on how those companies are aligning with the objectives of the EU Green Deal. The third point, third theme likely to be explored heavily in the new strategy is transition finance. I think we dealt with that in our previous call a month ago, but a lot of the, if you want, discussions and maybe slight criticism leveled at measures like the EU taxonomy were particularly directed at the fact that it focused on identifying the very sustainable investments, but was maybe slightly less relevant for the whole discussion around transition finance and how you transition the high emitting sectors of the economy to a more low carbon business model. So we expect the transition finance theme to feature predominantly in that strategy as well. And finally, maybe less directly relevant to financial market participants, but equally good to get a sense of the mood is in Brussels is the fact that we may see quite a range of proposals in the area of structural support to EU member states in designing sustainable finance friendly national policies. And there, you could see it targeted at parts of Europe where maybe some member states are less advanced on their sustainability journeys, and where there is a need for structural support in terms of policy design, as well as more direct financial support, such as through mechanisms like the Just Transition Fund. So, in essence, we expect those four themes to feature prominently in the strategy. I think it's still, I would say, wrapped in mystery what the specific policy actions may be, but we hope, at the next edition of our monthly call to hopefully be able to have a bit better sense of clarity of what we can expect in terms of specifics. And it's likely that this new strategy will also, come alongside a host of measures that the Commission is developing and is planning to adopt. We're expecting to see, in line with the strategy, a legislative proposal for an EU green bond standard. Furthermore, we expect at this stage that the European Commission will also adopt formally the famous Article 8 Taxonomy Delegated Act, that is the rules in taxonomy requiring non-financial companies as well as financial companies subject to the, non-financial reporting directive, now corporate sustainability reporting directive, to disclose how their business and operations are aligning with the objectives of the EU taxonomy. And finally, a third thing that we're expecting as well is that we should see around the same time the adoption of the technical standards under the Sustainable Finance Disclosure Sustainable Finance Disclosure Regulation, or SFDR. There, we would expect a combination of the first set of technical standards adopted earlier this year, as well as the sets around taxonomy alignment, for which the consultation by the European supervisory authorities closed last year. But we'll get back to there in a minute. So moving on to the Sustainable Finance Disclosure Regulation, as you may know, until recently, the supervisory authorities, ESMA, EIOPA, and the EBA, were consulting on so-called Article 5 and 6 of the taxonomy, and how the taxonomy alignment KPIs, if you want, would apply at product level. So rather than, earlier in the year, Article 8, which focused on disclosures at company or entity level, the consultation that recently closed focused on providing similar rules, but for the products. We expect now the ESAs to take on board the feedback and probably aim to provide the European Commission with their final report in the course of June. once those authorities have submitted the final report, the European Commission needs to decide whether or not to adopt these rules with the exact same proposal with some modifications. In this case, we expect that ultimately what the Commission is going to adopt will be quite close to what the European supervisory authorities had proposed initially. We expect also, as I said, what will come out in July alongside the strategy, we expect that to be one package. So the SFDR technical standards will be part of one package covering, what we've seen earlier in the year around specific disclosure requirements for Article 8 products, for Article 9 products, for entity disclosures under Article 4 around principal adverse impact indicators, as well as the technical standards around disclosing taxonomy alignment at product level, which should come in the course of July, as said. Finally, we are given strong indications that alongside the technical standards for SFDR, we may see in July also some forms of Q&A, questions and answer tool provided by the Commission. Those Q&As which specifically focus on the probably the interpretation and application of key definitions that are in the text of the regulation itself, so the level 1 text. For obvious legal reasons, the supervisory authorities are not able to interpret the level 1. They can merely provide technical standards based on the mandates that are given in the legislation. This has in the past raised a number of challenges, particularly around things like the classification of products. Another issue is, for example, the way you calculate the threshold of 500 employees, which is decisive for whether you are required or not to report on your principal adverse impact indicators under Article 4. And another notion quite important is how a product is considering those principal adverse impact indicators and what it actually means, and how does considering needs to be probably translated in more operational terms. So these are a number of the issues we may or hopefully will see some answers in the form of this Q&A tool. Finally, in the SFDR context, I think to take of note as well is that we are seeing the emergence of local guidance. So I think a number of regulators in a number of EU member states are undertaking steps in their local context, in their jurisdiction, to interpret the SFDR, and particularly where they feel that regulatory framework is incomplete. This is notably the case around how you more precisely define which investment strategy falls in Article 8, which one belongs to Article 9, or which one maybe belongs to neither. And there we understand that in the countries where we are seeing this activity, that regulators may be thinking of putting in place specific thresholds and quantified thresholds. And obviously, once that happens at national level, there is always a risk that regulators in different European countries may adopt different answers, and therefore may lead inadvertently to inconsistent or different rules across different member states. Moving on to the next item, we just wanted to provide you a recap of different developments on the taxonomy regulation. I'm just taking the opportunity that we're changing topics to remind you that you're free to ask questions via the Q&A tool, and we'll address them after the presentation. So in terms of the next developments on the taxonomy regulation, as we said in my initial remarks, we are expecting the Commission to adopt the Taxonomy Article 8 Delegated Act. That covers how companies disclose their alignment with the taxonomy, how as well asset managers, banks, and insurance companies disclose, and a different set of KPIs that have been developed specifically for those different subsets of firms. The Commission is currently consulting on those rules. The draft rules have been published, and that consultation will close on the 2nd of June with the ideal way, the rules being adopted alongside the strategy in early July. And here it's good to remind ourselves a bit of the process. Once the Commission adopt the rules, they are sent to the co-legislators at European level, that is the European Parliament and the Council, which represents the member states. Both institutions have to not object and therefore tacitly support the measures. The timelines for those under the taxonomy regulation are what we call the 4+2 rules. Essentially, the Council and the European Parliament have 4 months to indicate that to the Commission that they do not object to the Commission's proposal. That timeline of 4 months can be extended once by a period of 2 months if the institutions deem it necessary. In terms of additional developments beyond, as we mentioned last time, when the Commission made its announcement in April around its communication on taxonomy, it was clear that a number of sectors that were particularly sensitive, that the regulatory treatment of those under the taxonomy has been delayed to later on this year. In the fourth quarter, that's particularly around sectors like agriculture, as well as the nuclear energy and natural gas. But what's interesting to note here is that the Commission did, on the 21st of April, propose the delegated acts on climate mitigation and adaptation for the remaining sectors, and that by Q4 of this year, that will also be the end of the non-objection period of the Parliament and the Council. So we'll have those multiple, if you want, legislative processes running in parallel. And also, just for everyone to remember that in parallel, we will also normally see proposals around the 4 remaining environmental objectives of the EU taxonomy. So we will have multiple tracks running in parallel, which always can lead to interesting political dynamics emerging, and and the potential for trade-offs and compromises having to be made. So I think it's fair to say we'll have to closely watch this space when developments unfold in between September and December of this year. Moving on to our next, to other developments around the EU taxonomy. In parallel to all those adoptions of the various delegated acts, there was also, questions about how the, regulatory framework of the taxonomy itself, so the level 1 text, should evolve. That's one of the prime mandates of the, EU platform on sustainable finance convened by the Commission. And there we are expecting imminently, at the end of this month or early June, to see a number of interim reports from a number of the working groups. Just to recap here for everyone's for the sake of completeness, and there's a working group on developing a significant harm, no significant impact, and neutral taxonomy. So polluting taxonomy. There's the working group actually working on the content of those 4 remaining environmental objectives on the taxonomy, which I just mentioned. There is a working group working on whether we should expand and develop a social taxonomy. And then there's finally, for probably one of the most watched for market practitioners, which is the question about the work stream on data access and the usability of the taxonomy. So we're expecting to see interim reports of some of these groups imminently, and probably with a period for feedback and consultation for stakeholders as well. Finally, on taxonomy, as some of you may recall, somewhat surprisingly, the Commission communication of the 21st of April had mentioned that by the end of the year, the Commission would be thinking of a legislative proposal on transition finance. without, I think, specifying any further details. So at this stage, it's very unclear where that's going. But in our experience, what we might see at the end of the day is some suggestions around, revisiting the text, the level 1 text of a taxonomy to embed the transition finance theme much more prominently than it's been before. And there, our guess would be to have a close look at the report from the EU Platform on Sustainable Finance around transition and how to leverage taxonomy, which was published towards the end of March, which contained a number of recommendations. So that's it for the taxonomy. Moving on to our next topic, and we are seeing the question and answers appear in the chat. We'll get back to those at the end of the presentation, so don't worry, we haven't forgotten you. Just a little bit of a recap on the Corporate Sustainability Reporting Directive, which obviously is an essential piece of legislation in the whole architecture to ensure that gradually financial markets get access to better quality data and more comparable and verified data from corporate issuers. It was adopted on the 21st of April as part of this package that we just discussed. Now the question is, it's now up to the co-legislators, the Parliament and Council, to start their internal negotiation and positions on the Commission proposal. In the European Parliament, our expectation is that it will be the Committee on Legal Affairs from the Parliament, the Jury Committee, that will take the lead in negotiating the legislative file. We are not yet clear on what the role of the Economic and Monetary Affairs Committee, Econ Committee, will be in that process. But just as a reminder to everyone, it is the Econ Committee that took, it's fair to say, took a leading role in most, if not nearly all, sustainable finance related legislative proposals over the last couple of years. So it will be interesting to watch. Finally, when it comes to the Council, we expect, so how the Council works is that every 6 months there's another member state having the rotating presidency of the Council. On the 1st of July, the presidency changes from Portugal, who currently carried the presidency, to Slovenia. So we expect that actually the Slovenian presidency will make the negotiations of the CSRD proposal a priority in the Council, and so we should probably see quite a bit of activity over the beginning of the summer and the autumn to advance on that. And in parallel, I think what is interesting to note as well is the question, the CSRD as proposed, really at the end of the day, it was probably likely to only work if there's a sustainability reporting standard at the EU level. Of course, we all know EFRAG has been mandated by the Commission to develop that over the course of the next couple of years. In a way, we get an interesting situation emerging now in that EFRAG has not been given a formal role yet under the legislation because the CSRD is up for negotiations. But recently, early May, the European Commission confirmed that it was certainly encouraged and wanted EFRAG to press ahead and deliver, as foreseen in the EFRAG report earlier this year, the first set of standards by October 2022. And that would be the set of standards prioritizing information that is required by financial market participants under the other pieces of EU legislation and a number of other critical sectors, and a second set of standards to be developed by October 2023. We get a interesting situation here, a little bit similar in a way to what happened 2 years ago with the technical expert group, the TEG, on the taxonomy, where we had this expert group developing the taxonomy while negotiations on the underlying legislative framework were not yet finalized. We're seeing a little bit of the same emerging here with CSRD not yet being finalized, yet EFRAG being asked to start the work already. Finally, final point of update, it's now also over the last couple of weeks been clear that we should expect to see now this, so-called Fit for 55 legislative package on the Green Deal published on the 14th of July. This is, from a EU Green Deal perspective, a very important milestone in that this combined set of proposals, which, as you can see, are quite significant. The idea of the idea of this combined set of proposals would be to ensure that it puts a number of, regulatory frameworks in a number of economic sectors on a very strong pathway to align with the objectives of the European Climate Law, which we mentioned at the beginning of this presentation. So you'll see there's some number of high-profile elements like the revision of the European emissions trading system. There is a famous carbon border adjustment mechanism. There's revision of the Energy Tax Directive, the Renewable Energies Directive. So, a whole range of important files. What is important to remember is that the revision of all these files is likely to have a bearing on the political negotiations around some of the topics covered off in the Taxonomy Delegated Acts. So I think it will be interesting to see how we get if you want, a dual track of financial services policy on a taxonomy developing in parallel to other legislative files, which are traditionally more of the climate and energy department. But that one is to be continued. That was our update for this month, as we're expecting major developments later in June and July as we get a bit more clarity on the strategy. But now I'll turn on to pick up some of the questions that we've received. So first we had a question on Article 8. How likely is it that the Commission adopts the proposal as published and tabled recently? And I guess that's the proposal that's under consultation until the 2nd of June. Traditionally, the Commission tends to follow quite closely what is proposed initially, unless there are very good reasons, to deviate from what it initially proposed. So practice would say that what will be adopted in July under Article 8 would be quite similar to what's now being consulted on. However, that being said, I think we can all agree taxonomy is a bit of a strange one here, where last time the Commission published draft delegated act, it got 46,000 responses, and therefore the whole process got a slightly different calendar attached to it. So our expectation would be, that this is similar, but of course, that will be have to monitor closely. We got a very broad question on the European regulatory system and how likely it is to, offer a blueprint for international investors. I think it's a bit of a hard question to provide a conclusive answer here, but I think certainly from a Eurosif perspective, what we have been seeing in the markets up to now is that the different legislative frameworks adopted by the EU, particularly SFDR, have ramifications beyond the borders of Europe. I think the SFDR is also now known and discussed outside Europe and having, commercial implications for a lot of investors outside Europe. So it's fair to say that they're impacted. I think whether the European system will be a blueprint for other frameworks is probably a bit premature to draw a conclusion on that question at this stage. Then we have a specific question on the CSRD reporting. Indeed, that's a good question. When the reporting will exactly start? This is a complicated challenge. I think having CSRD reporting start as of January 2023 that's based on the timing of the proposal now by the Commission. It's, if you want, in the best of all possible worlds. But obviously CSRD needs to go through the political apparatus to get approved, and we don't know how much time that will take. It can take, a couple of months. It can also take 24 months to reach political agreement. I think it's not yet clear how fast we will get agreement on the CSRD proposal. But I think it's a valid point around the reporting and when we can expect the first set of corporate reporting with the CSRD in mind. A similar, here I think is good to note, a similar discussion is likely to emerge around Article 8 and reporting on taxonomy alignment under the taxonomy regulation. In that, if I'm not mistaken, companies would probably be expected to start reporting as of 2022. But obviously, since the rules have not been finalized, and particularly delegated act on climate mitigation and adaptation are not going to be, probably finalized and adopted before the end of this year, without wanting to draw any controversies here, it's going to be interesting how those timelines develop and whether they're feasible, particularly for non-financial companies. I think our recommendation, we watch that space because timelines may shift. And then we get a question on the taxonomy alignment standard under Article 6. I assume that's Article 6 of taxonomy, so it's around the products. And I think there, to summarize where we see the ESAs going is, integrating that as part of one set of RTS, the calculation, being done, having a choice for market participants on the types of KPI they use to disclose in their pre-contractual documents, as well in their periodic reporting. As you may know, there is for non-financial companies, the choice, or at least a question of whether turnover, capex or opex are most relevant. Asset managers are likely to have to disclose a total share of their assets under management. Banks will have this famous green asset ratio, and insurers are likely to see different KPIs altogether, also with a share of non-life gross premiums underwritten. So it's going to be interesting to see how different types of actors report on their KPIs for taxonomy alignment, and that will be part of the standardized pre-contractual and periodic reporting templates provided by the ESAs. Got a final question coming in there. To what extent is there a correspondence between the objective 1 of the taxonomy and the EU ETS? I will certainly not pretend to be an expert in that field, but I do know that for a number of sectors and the so-called technical screening criteria, the EU ETS, and particularly I think the category for best performing facilities on the EU ETS was used as a proxy benchmark to determine the technical screening criteria. So there is a link, definitely, but whether that applies exactly to all categories is, unfortunately, there seems to be no alternative than to read the entire taxonomy to get the conclusive answer to that question. So afraid I can't be more helpful than that today. Okay, looking at, it seems that we've gone through all the Q&As we have received today. So unless there's any further question, I want to thank you for following us today, and hopefully we've been able to shed some light on the recent developments and the immediately future developments on sustainable finance. I would say in general, don't hesitate to get in touch if you have any further questions, and follow us on social media, or don't hesitate also to register to our Eurosif newsletter. You can do that on our website, and that will provide you with a good recap on a monthly basis of what is happening. With that note, I wish you all a good rest of the day and a good rest of the week. And hopefully you will all dial in for our next event where we will be announcing the date very shortly. Thank you and have a good rest of the day.